Good afternoon. Hopefully I can be heard. Am I on? Okay. Welcome to the Effects of Economic Climate on Business webinar. Just so you know, this is part of our exit strategy series that Sunbelt Business Advisors offers to our clients. These webcast presentations are here to inform business owners so that when the time is right for you to move on to your next venture or retirement, you're going to be well positioned to minimize taxes and maximize what you walk away with at the closing, and I think that's probably everybody's concern. So I'm Joan Young, the president of Sunbelt Business Advisors. Sunbelt's the largest business brokerage network in the world with over, I think we have over 240 offices worldwide now. Our office is based in San Jose, and I've been helping buyers and sellers come together for over 31 years. Today, our guest speaker is Mark Whitfield, and he's Vice President of Wells Fargo and a Senior Business Development Officer. In 2000, Mark was named Rookie of the Year. He was setting all-time rookie funding records, and we are just so honored to have him educate us today. He's been a consistent top 10 producer each year and was recognized as the national sales champion in 2 years, 2003 and 2007, while setting an all-time company-wide funding record. His strong client relationships, and Mark has worked with many of my clients, his community service and unrivaled financial insights have allowed him to gain the respect of both clients and coworkers. One thing that I've recognized about Mark is he's very creative, and if there is a way to get your business funded, Mark will definitely do that. So Mark is going to discuss today the ins and outs of new laws around the SBA and to help you determine if your business is SBA financeable. So we will leave around 5 minutes at the end for Q&A, and if you'll notice, there's a box in the left-hand corner of your screen, and you can write in any questions, and we'll cover those at the end, just as many as we can. And if we didn't get to your question at the end, please feel free to call me directly or Mark, and we'll definitely take care of your question. So let's get started. Okay. Citibank did a poll that I thought would be very interesting. We're going to go over some statistics before Mark starts about just how encouraging it's looking for 2012 and beyond. 87% of small business owners expect 2012 to be better than the same time last year. And I don't know what that says because last year was pretty rough, but 40% of business owners said that the business conditions are as good or excellent from last year, and 26% of small business owners plan to hire more employees, which was encouraging in this year, which was a 12% increase. Another continuing survey from Citibank reported that half of the respondents said they are holding steady and poised to grow when conditions are right, and another third expect to grow rapidly or at least moderately this year. So I thought that was encouraging. I think everybody's probably heard of the Kiplinger letter, which reported that the gross domestic product will grow about 2.3% in 2012, which is ahead of last year, so it's good to see it's going in the right directions. Consumers are finally starting to spend more. You know, most of us have really tightened our belts, cut back on our expenses with business, and since it all happened in 2008 when the stock market dropped. And, you know, as you're hearing in the news, job creation is picking up, and the businesses are finally starting to invest in some new equipment and expand production after years of really not doing anything. And the fear of severe crisis in Europe are lower, and housing will be a small plus to the economy after negative growth for the past few years, which I thought was encouraging. Last month, there was an increase of 175,000 about 175 in the coming year, which is a little faster than the workforce that we thought of. And private employees are expecting to create a net of about 2.28 million jobs in 2012, but I'm also really glad to hear that federal and state and local governments are cutting about 180,000. Overseas growth is slowing in Asia and Europe, as definitely Europe is sliding into a recession. Housing demands still are remaining weak. January gains were widespread, and the private sector added about 267,000 jobs. So all this is very positive, I think, for small business going forward. 50,000 jobs were created in manufacturing, and that's because the auto industry is definitely going up. Interest rates, which Mark's going to be talking about, they're going to be holding steady, staying at, I think, one of the lowest records they've ever been, and that's not going to change till the end of 2014. I just read another study on that, which is encouraging. And business spending is supposed to increase 6% after expanding by 8% in 2011. So this compromises investing in buildings, equipment, and software that small businesses are doing. And then the recent infusion of capital into European banking eases concern about global financial crisis. I think the jury's still out on what's going to happen there, but Congress looks like it's moving forward with a full-year extension of payroll tax cuts. Okay, let's look at franchising outlook, which is, our office does franchising as well, and we've noticed it definitely even doing better than regular small businesses that aren't franchised. This looks like it's not a huge increase, but just a little under 2% growth expected for this year. Employment is growing up. Economic output, an increase of $37 billion. And the gross domestic product contribution definitely up from $439 billion to $460 billion. So that's an increase of $21 billion, which is encouraging. So now I would like to turn it over to Mark Whitfield. I don't know if Mark was on to hear my rave reviews about him.
I was. Thank you so much,
good,
Joan.
Mark. Good. We're glad to have you here today, Mark.
Fantastic. Well, thanks for the opportunity, Joan. I really appreciate it.
Sure.
Well, I'm here to talk about my world, which is the SBA lending world, and I'll just go over my observation. Having done this for 17 years, I've gone through 3 recessions, but there was nothing quite like what we experienced over the last 3 years, and it's been very interesting for me to observe as a lender to see how the economy changed and how the lending environment and appetite from banks' perspective has changed, as well as from the consumer perspective, borrower's perspective. What I see from my world is major changes in the economy, which result in I see more and more people looking for self-employment. People in the corporate world in particular came to realization that the job security isn't there anymore, and I've fielded many, many more phone calls from potential business owners. People were calling me with 20, 30 years of corporate experience. Many were in high-level executive types who were calling to inquire about SBA financing, how they can get loans to start their business or how to buy business. So that's the observation I've noticed. At the same time, I've seen observations where many banks' credit standard has tightened greatly in reaction to the declining economy. And I feel very fortunate to work for Wells Fargo Bank because during the past 3 years, one bank has stood out and has risen above others because the Wells Fargo Bank has been the most stable bank amongst banks, bigger banks out there. And our lending criteria really hasn't changed much because we are very solid. We've always lended using common sense. We've never ventured into just irrational loan types. Therefore, even during recession, because our underwriting guideline is commonsensical, we really haven't changed much. So what that resulted in was us dominating in the SBA lending world. While other lenders said no, we would say yes. And we become number one SBA lender in 2009, 10, and 11, 3 years in a row. And we're the first lender ever to exceed $1 billion mark in SBA lending world. In fact, in 2011, we've lent almost $1.2 billion in SBA loans. So I feel very fortunate, again, to work for Wells Fargo because we are a dominant and number one SBA lender. So if you go to the next page, next slide, we can go over, let's see here. Do I have to move the slide, or how do I do it?
We're moving them, Mark. We're now on SBA lending. We were on the agenda. Do you want us to go back to the agenda?
No, actually, why don't you go to, since I talked about the SBA lending environment a little bit, we can go to the next page.
Okay.
Let's talk to you about what is SBA loan. SBA loan, 7A loan is a federally insured loan. The reason we can, for example, finance a business purchase sale, whereby most of the purchase price will be what we call intangibles or goodwill. The reason we're willing to finance business sales, for example, is because the federal government is willing to insure our loan up to 75%. So every dollar we lend, the federal government is willing to give us back up to 75 cents if the buyer or the borrower cannot repay our loan during the life of the loan. Therefore, we can be very aggressive and finance even business sales. It's a great program. It's a versatile and flexible program. For business acquisition financing, I can go up to $1.75 million. This is a Wells Fargo guideline. And I can even go up to $1.25 million unsecured. What that means is if the buyer does not have additional collateral, such as real estate, then I can go up to $1.25 million unsecured. The loan amount above that, we would need additional collateral in the form of real estate. That's the guideline that we have at Wells Fargo. And also, we like to make sure that the buyer is successful once the buyer purchases business and make sure that they have ample, sufficient working capital. So SBA loan allows us to not only finance the business acquisition, but on top of that, we typically give additional working capital loan or a separate business line of credit for the buyer. Next page, please. There are several advantages of SBA loan. It's a low down payment program, mainly because we have government's guarantee behind it, so we can take more risk. So I can finance up to 85% of the purchase price, and the loan term is longer than conventional financing options. It's 10 years fully amortized, and there is no prepayment penalty. So a business owner can run the business, and with any extra cash flow, they can pay down the loan as fast as they would like without worrying about paying penalty. Next slide, please. So when we were to finance a business acquisition, we have a certain profile we do look at. I'm sharing with you our general underwriting guidelines, and most important criteria when we finance a business acquisition is the historical financials on the seller. We will review seller's last 3 years' tax returns, and our main focus will be last 2 years, more importantly, most recent full year, plus the interim period. The business has to demonstrate loan repayment ability. Later in my presentation, I'll talk to you about how we calculate actual ratios in a very simple manner. But I would say most important factor is the seller's historical performance. And we understand the recession impacted many businesses, and given that this is 2012, our focus will be mostly in 2011 and 2012 interim period. Then secondly, just as important, we look at the buyer's profile. Ideally, we need to find a buyer who has ideally direct industry experience, if not a minimum strong management experience to run the business efficiently. So we'll look at the seller's industry in a case by case, and depending on the industry, we'll be looking for more significant industry experience. Also, we want the buyer to have minimum living expenses because if the buyer requires a significant draw to cover his or her living expenses, it will wipe out the business cash flow from the seller's business. So it'll be most ideal if the buyer has a reasonable living expenses. And, of course, the buyer needs to have sufficient down payment between 15 to 25%. And lastly, decent credit history. No perfect credit history is required, but we want to make sure that the buyer does not have significant derogatory such as bankruptcy and short sale history. Next slide, please. So in terms of down payment, I mentioned earlier we require between 15 to 25%. That down payment requirement is dictated by the SBA, not Wells Fargo. There's a general guideline that we have to follow, all SBA lenders have to follow, and what dictates down payment amount are two things. The seller's cash flow, business cash flow, but also we need to find out how much goodwill is in the purchase price. And if the amount of the goodwill or intangible value exceeds $500,000, then the SBA says that we can finance up to 75% of the purchase price. So the combination of the buyer's injection as well as seller carry note, if applicable, must be at least 25% under that scenario. If the goodwill or intangible value is less than $500,000, then we can finance up to 85% of the purchase price, whereby combination of buyer and seller injection must be at least 15%. And I've seen quite often buyer come up with 10% down payment and seller carry 5%. And the last thing I want to talk about is cash flow analysis. I want to share with the audience as to how we determine whether or not we can lend. This is a very simple formula, and I will illustrate. It's something that I can analyze the seller's tax returns and the buyer's financials. Within 10 minutes, I can determine whether or not I can give a loan because I just take these following 4 steps to determine the cash flow. So step number 1 is I would ask for the seller's tax returns, and each year I'll be analyzing the net cash flow the business actually generated. So, for example, in 2011, I will look at the tax return and I will look at the net income line item and seller salary if it's corporation, depreciation, and interest, and come up with a lump sum money. And let's just, point of illustration, the total cash flow is $100,000. Then step 2, I would need to determine the buyer's living expenses and his or her draw need. Because the rationale is that before any buyer repays an SBA loan back, they'll pay themselves to cover their living expenses. So that's why it's important to find a buyer who does not have significant draw or living expenses because of this step 2. So let's say the buyer needs only $50,000 as an example. So the total cash flow is $100,000. Buyer's draw need is $50,000. Then third step I determine is annual SBA loan payment. So I know the purchase price, I know what the down payment is, and I calculate what the annual SBA loan payment is. And for illustration purposes, let's say it's $40,000. So once I know those 3 things, I can calculate our debt service ratio. And that's very simple. Step number 1 was $100,000 as an illustration. Step number 2, living expenses $50,000. So $100,000 minus $50,000. The remaining net cash flow of $50,000 is divided by the annual SBA loan payment, which, for example, is $40,000. The ratio between $50,000 and $40,000 is 1.25. That's the debt service ratio. What the ratio means is that the business generated sufficient cash flow to repay our loan back in a ratio of 1.2 to 1. So every $1.25 in available net cash flow, the business has $1 in debt. So therefore, there's a 25% cushion remaining. That's the comfortable ratio that we want ideally for the recent 1 year plus the interim period. So that'll be 2011 and the interim period 2012. So as you can see, the formula we use is a very simple formula to determine cash flow. And frankly, I think many businesses, more and more businesses, meet this very loose requirement because I find that here in the Bay Area, most companies financial conditions have improved gradually from 2009 at the bottom to 2010 and 2010 to 2011. So therefore, I find that more and more businesses are eligible for financing under the SBA guideline that we have here. So that's what I see, and I feel like I'm a microcosm of the Bay Area economy because I service small businesses all over the Bay Area in various sectors. So I'd like to talk to you a little bit about Wells Fargo SBA Lending's track record. We started lending back in 1998, and we became one of the first national SBA preferred lender. What that means is the SBA trusts our ability to approve our loan that we can make a unilateral decision without their permission to make a credit decision. And therefore, we can close our SBA loan much faster than anybody else. And because, as I mentioned earlier, about our standing, the fact that we've been the stable lender for the past 3 years, we became #1 SBA volume lender 3 years in a row, 2009, 10, and 11, and we were named SBA Lender of the Year in 2011. And as you can see, the national lender ranking from last year, we simply dominate our lending world. You'll see Wells Fargo is #1 at $1.2 billion. Then we have Chase, J.P. Morgan Chase. Just note that J.P. Morgan Chase does not finance business sales acquisition. They primarily focus on real estate financing. And U.S. Bank, same thing. And Live Oak specialize in medical, dental, veterinary practice sales and building purchase. So really, among those lenders, we're the only lender that has appetite for business acquisition financing. Next slide, please. So this slide highlights our status as being the SBA Lender of the Year. We've been receiving many accolades across from politicians to even other lenders as to being #1 SBA lender and be the most proactive SBA lender. Next page, please. A little bit about my background. Earlier, Joe mentioned about my 17-year history. I started lending, doing SBA financing since 1995. And when I started out, I was an underwriter, someone who made credit decisions, receiving loan packages, and I was also a credit manager for a few years. So having underwritten loans for 5 years, during which time I've reviewed over 6,000 SBA loan applications, it gives me a tremendous experience, and I feel like I can review any complex loan request and be able to make a credit decision very efficiently and quickly. And because of my credit background, I was able to be very productive, and I was #1 producer in the nation for my bank in 2003, 7, and 9, and top 10 producer every year. So I'll be, I think, a great resource for any sellers of the business or buyers of the business to pre-qualify an SBA loan request very efficiently and fast. So I really look forward to assisting you and answering any questions you may have about SBA financing. And you can call me, contact me anytime.
I think, Mark, we have I have 2 questions here, and I encourage anybody on the line to write your questions in the left-hand box at the bottom. But one of our listeners is asking, can Wells Fargo lend on expansion of a business as well as lending money to a buyer to acquire their company?
Expansion of the business for the buyer or for the seller?
No, the seller. We have sellers on today. So if somebody wants to, they're not quite ready to sell their company and have it acquired, but they're interested in growth. Yes. And they want to, let's say, buy new equipment or expand and get a bigger facility, and they need to borrow. Do you do that?
Yes, I do. In fact, I would say about 30% of our SBA loan proceeds are used for business sales financing. Mm-hmm. Remaining 70% is used for the business expansion. For example, under the SBA guideline, I can finance up to 100% of the equipment purchase up to $2 million, sometimes higher. No injection or down payment is required for equipment purchase. The terms are typically 10 years, fully amortized with no prepayment penalty.
Mm-hmm.
Real estate purchase. These days, I'm very busy financing real estate purchase. 10% down, and the market is very healthy because to own a building is 30% cheaper typically than to lease the same size space. So what's happening with a lot of business owners is that they're buying real estate with the intention of selling the business, but once they own the building, what they do is they only sell the business. Therefore, they can derive a long-term rental income. So
right. They become the landlord.
Exactly. Because when it comes to business acquisition, for a lot of businesses that are location sensitive, SBA does require minimum 10-year lease. And if the landlord's crazy and doesn't give 10-year lease for that kind of business, well, guess what? The seller has lost all his goodwill value in the business and cannot sell the business. So,
okay.
And also working capital, business growing. I can provide an SBA Express, which is a business line of credit, as well as term loan. And because I work for Wells Fargo, I have partners who provide conventional financing for growing businesses. So to answer your question, yes, I can definitely help existing owners of business with expansion and growth.
Okay. Another question is, how important is it that a buyer have the same experience in the company that he's purchasing? So if it's a manufacturing company, does the buyer have to have manufacturing experience, or can he transfer management skills into something like that?
Yeah, for a manufacturing company, I think that we may look at the industry experience a little more closely. I think we look at each industry in a case-by-case situation. If it is a highly defined industry that requires a technical expertise, I think we would expect direct industry experience. But depending on what kind of manufacturing, if it is for example, I'll illustrate here. I'm currently financing a ink toner refurbishing and distribution business, for example, and it doesn't sound very technical. The buyer is buying the business with no experience whatsoever. He comes from IT background, actually worked for Cisco for many years. He does bring in understanding of general technology, significant personnel management experience, and sales and marketing experience. So that's an example. That's where we're looking for some transferable experience. However, if somebody's buying a gas station or hotel or manufacturer of very highly defined, let's say machine shop, for example, I think we're looking for some more direct industry experience.
Okay, that's good. If anybody else has a question, I'm going to unmute everybody so you can. Okay.
The conference has been unmuted.
Is there any other question from the group, from the lending process? Okay. Mark, anything else about the criteria that I know in certain industries like manufacturing, it's very important, that they can transfer skills or, and I know in many industries, just by having a good, strong management, and they've had P&L responsibility as well as hiring and firing, and that can be done, especially if it's a franchise, correct?
Yes, that's correct.
Right. And many franchise companies have already been pre-qualified through SBA. Maybe you can talk just a little bit about that.
Yes. I think the franchise does add value to an SBA transaction because if somebody's lacking direct industry experience, I think buying a franchise makes more sense because we know that franchise does offer comprehensive training, including management training and so forth, and provide manuals, HR manuals sometimes. But again, really, I think I have to say that it really depends on the industry and the type of business the buyer's buying. So, generally speaking, I think we're looking for more direct industry experience if the industry itself is very specific. Whereas some general businesses, distribution businesses, for example, as long as they have a transferable management skills, we're okay with it.
Okay. Well, I think that's all the questions that the group had. So, Mark, I can't thank you enough, and I just endorse Mark wholeheartedly. He's been able to put together some deals that look very difficult, and Mark's very creative and thinks outside the box. And, Mark, I just want to thank you again.
Well, I appreciate your endorsement, and I look forward to speaking with people in the audience anytime. And Joan, I'm going to forward you Wells Fargo's economic report that comes out on a monthly basis.
Okay.
And maybe some of the audience member wants to get a copy of it, and you can forward the attachment. It's a glowing economic review. If you don't mind, I spend 1 minute going over why this is the perfect time to perhaps sell the business or buy business. The prospect is really good. The headline says the West Coast in particular saw economic activity improve, and with the housing slump, impacting the economy lessening. And California will be the fastest growing region in 2012.
Good.
California has hired over almost 250,000 new jobs in 2011, and unemployment rate is going down. In the Bay Area in particular, you see San Francisco with 7.7 unemployment rate. In California as a whole, it's over 11%. So it really shows that the Bay Area economy is recovering because of our diverse economy and economy tied to technology. So I agree with this.
I was going to say that ties into another question. Let's say a business, I know you like to see 3 years financials, P&Ls, tax returns, and let's say 2011 was strong, but 2010 was down 15, maybe even 20% versus the previous years.
Yes.
How's the bank looking at that now if 2011 is on the rise?
Yes. Our main focus will be 2011 and the interim period in 2012.
Okay, good.
Yeah, we're looking for a trend. We're looking for signs of improvements. And, had you called me in 2009, I can tell you that it would have been very difficult to finance businesses because the kind of numbers you'll see will be declining revenues for most businesses.
Right.
And it would be very difficult for any lenders to finance a change of ownership, which in itself is very risky, as you know, for an unstable company that shows decline. However, what I see, a positive trend, I see companies bottoming out in 2010 and improving in 2011 and 2012.
Yeah, we're seeing the same. There's quite a few clients that I talked to 4 years ago. They're now calling and saying, we're ready. So you'll be hearing from me.
That sounds great.
Okay, thank you so much. And thank you, everybody, for getting on. And we'll be having another webinar regarding exit strategy in probably 6 to 8 weeks. Thank you.
You're welcome. Thank you.
Bye-bye.
Thank you. Please stand by.